Let's talk about LLC versus Inc., which is really better for your business. Let's have a clear conversation about that. So here's an overview I want you to pay attention to. So when we think about LLC versus Inc., which is really better, deciding which of these factors that really will impact your company legal structure is kind of important, okay? Including short and long-term objectives. So the decision to incorporate or form a limited liability company often depends on your business strategy and objectives, anticipated size of the business, opportunities for growth and expansion, annual reporting requirements, preferred taxation structure, desire for limited personal liability, and other significant factors. For example, business funding is kind of important. Whether you want to attract investors, later one really depends, okay? And also, things can be a little complicated when you have multiple members forming the business. In other words, you have to find an agreement so that all members are pretty comfortable. So understanding the similarities and differences between incorporating and forming an LLC will allow you to make a sound business decision that suits your needs and goals. And one thing I want to say is that let's first talk about the structure and ownership features of corporations and LLCs. So a corporation is generally classified as a number of individuals authorized by a particular state's laws to transact business as a single legal entity. So corporations may be comprised of a single individual or hundreds, even thousands of people. Okay, so there's no numbers really depends. And the owners of the corporation are known as the shareholders. So the management of the day-to-day operations and major decision-making functions of the corporation is actually left in the board of directors' hands. So you have executives, but you also have the board of directors. So while an LLC is not a corporation, it is nonetheless a very popular business entity type, particularly among small businesses. And the owners of an LLC are referred to as members, while the individual or entity responsible for overseeing and managing the LLC's daily operations is known as the managing member. An LLC that a single owner operates is known as a single member LLC. And an LLC that is comprised of multiple owners is actually known as a multi-member LLC and is organized or treated much like a partnership. So while corporations are replete with statutory requirements and other formalities, LLCs are less structured. Many business owners and operators gravitate towards LLCs as the entity of choice, partly because of their flexibility, including the lack of traditional corporate formalities and requirements. Well, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. One thing I want to say here is that the startup process for corporations and LLCs is quite different. So I want to really talk a little bit about that because regardless of the business structure that you choose, you need to be cognizant of the rules and regulations like revolving around each entity type. So the first step towards incorporating your business involves preparing and filing the required formation documents. This is done with the Secretary of State or a compatible governmental agency in the state where the corporation's primary place of business will be situated or where the majority of business transactions will occur. And so although the incorporation forms and the process is to be followed may be lengthy or maybe short depending on the states, corporations must typically file articles of incorporation and pay certain incorporation fees at the time of filing. And you can actually pay those fees online or send a check to the state regulatory authority. So after the incorporation documents have been filed and processed, what happens here is that the corporation will be required to nominate a board of directors and normally a CEO and other corporate officers. So CEO, Chief Executive Officer. And so basically the corporation will also establish and vote on bylaws that set forth how the corporation will be operated and managed, right? Such as the procedure for issuing stocks, dividends, bonuses, or similar financial concerns. Additionally, the corporation must apply for an employer identification number (EIN) through the IRS so that annual corporate taxes can be paid, set up corporate bank accounts, and select a registered agent to receive and process correspondence, notices, and lawsuits. And basically, once up and running, corporations may purchase or sell property, enter into contracts and engage in a number of other business activities. And if the corporation is formed as a stock corporation, it is permitted to issue and distribute shares of stock to its shareholders, officers, and directors. One thing I need to say here is that when we talk about incorporation, a C corporation for that matter, you have the concept of double taxation. In other words, the corporation is paying taxes on its net income, but also the like when you get dividends from the company as a shareholder, you still pay income on that as well. Plus, I want to quickly remind you of today's topic. We are having a conversation about LLC versus Inc. What's really the difference? So I've just finished to explain to you the process for forming a corporation. Let's talk about the LLCs right now. That's really what happens if we have a limited liability company. So LLCs, on the other hand, are not incorporated. In other words, they are formed or organized. Although there may be different legal requirements in each state, forming an LLC normally begins by filing one or more documents with the Secretary of State or a similar government entity that regulates new and existing businesses. And basically, the thing is that these documents generally include the certificate of formation or articles of organization, and each document offers general information concerning the LLC, including the name, address, nature of the business, number of members, and similar topics. And instead of being guided by corporate bylaws, LLCs are normally governed by an operating agreement. So the operating agreement provides the details regarding the company, including each member's initial financial contribution to the LLC, the voting rights afforded to each member, as well as the percentage of interest each member holds. So what I'm trying to say here is that when you have an LLC operating agreement, just make sure things are clarified, right? It's all about really elucidating all different aspects of your business, of your LLC, because God forbid something were to happen and you guys are fighting. Like if the LLC members are having a disagreement, the operating agreement is basically the documents everybody refers to, including courts. Okay, and so it's important to understand that unlike corporations, LLCs do not issue shares. Instead, the members of the LLC hold a percentage of interest in the company. So if the setup, rigid bylaws, and overall operation of a corporation seem too onerous, too expensive, perhaps the simplicity and flexibility of an LLC is a better fit, right? It's one of those things where you have to really see what really works for you, depending on your industry, depending on your state, depending on the members who are actually forming the LLC. It's all about having a compromise at this level. Let's talk about personal liability. And the thing is that as we're analyzing LLC versus incorporated versus Inc. Corporations and LLCs each feature a protection for personal liability. And so let's talk about that. The primary benefits and most attractive feature shared by both corporations and LLCs is the fact that both entities remain separate and distinct from the owners, right? This is important because it allows the owners to avoid incurring personal liability for the corporation or LLC's business debts. For instance, in the event of a bankruptcy or a legal dispute with the business, the owner's personal assets like bank accounts, homes, and cars are not typically viewed as assets of the company. And in the case of a corporation, the shareholders, officers, board members, and employees are all shielded from the threat of taking on personal liability in the event a lawsuit is filed against the corporation, or if the corporation incurs the debts, expenses, and or other liabilities or losses. And this is kind of important to mention. So similarly, the members of the LLC are protected against becoming personally liable for the LLC's losses, liabilities, or debts, just as they are immune from individual liability in the event a lawsuit is filed against the LLC or if a collection action is pursued against the LLC. One thing I have to say here is that if you want to have protection from personal liability, you need to actually institute in practice a series of procedures that really tell an independent observer that you are segregating your personal affairs from the LLC's or the corporation's affairs. Otherwise, there's something called piercing the corporate veil. In other words, when you go to court if you do not have this sort of a solid process in place, a court may actually issue a judgment against you. A court may pierce the corporate veil. In other words, the court may not recognize this protection from personal liability. Okay, so you want to make sure, for instance, you have a business bank account for your LLC. You want to actually have a business credit card. You want to charge all business expenses on that credit card, or you want to pay for all the business expenses from your business bank account. In other words, you really want to give the appearance to an independent observer, including a judge, that you are separating your company's affairs from your business affairs. Also, I want to quickly remind you of today's topic. We are having a conversation about LLC versus Inc. Let's talk about annual filing and other obligations. So corporations and LLCs have different requirements with respect to annual filing obligations. Let's go into the details here. So all corporations must file an annual reports and convene an annual shareholders meeting. So during the annual meeting, minutes are kept and records are of any significant matters discussed or decided upon are maintained. And the chief among the issues discussed at the annual meeting is the framework for issuing dividends, bonuses, and other forms of compensations. So it's important that when we talk about issuing dividends, bonuses, and other forms of compensations, you got to look at the accounting implications of those processes, as well as the tax implications. In terms of accounting, basically, when you issue dividends, I mean, you can actually hire a CPA firm or just to have an accountant really handle that for you. But there are some implications in terms of the stockholders' equity account. So this is actually because when we talk about the financial statements of a company, we have four, right? Income statement, balance sheet, we have a cash flow statements, and stockholders' equity statement. So anytime you talk about issuing dividends, bonuses, and other forms of compensations, those financial statements are actually impacted. So this is for corporations. On the other hand, LLCs are not obligated to convene annual meetings or to maintain minutes of any company meetings. Additionally, except in some states, annual reports are not required to be filed. So in many cases, it's the flexibility of the LLC which makes it such an appealing entity choice, especially among individuals who wish to operate a business and small businesses. Because you really want to think about, you do not want to actually crowd your agenda with too many regulations, right? Corporations can be less attractive if you are someone who is not interested in keeping up with the rather expensive corporate requirements. Because as you can see, you really need to maintain a really solid, a really rigid, a really strict, corporate regimen, regulatory regimen, if you want to comply with the law at the corporations level. Let's talk about tax time. What really happened here? So when it comes to the differences between corporations and LLCs in terms of their tax structure, it's important to recognize that income that a corporation generates is subject to so-called double taxation. I think I've mentioned that earlier, but now I really want to elucidate things for you a little further here. So the income is taxed twice, once at the corporate entity level, and at the second time when income is distributed to the shareholders. Let me talk about that a little bit. So basically, when you have when you look at a corporation's income statement, everything starts with sales, right, and ends up with net income. So basically, before you actually get to a net income level, you have to actually calculate something called net income before taxes, and then you apply the tax rate. Right now it's 21% at the federal level. You might have to pay you might have to pay tax rate at the state level. So you apply 21% on that net income before taxes, and so 79% of that income is considered the income that can be distributed to shareholders in forms of dividends and other kind of stuff. Okay, and so this is for corporations. Conversely, for LLCs, the benefit at tax time is the array of filing options available. In this regard, LLCs are not locked into one particular tax structure or a classification. Instead, they may choose how they wish to be taxed. For instance, The benefit of a single member LLC is that the owner is subject to paying personal income tax on any profits generated by the LLC in a given tax year, just as would be the case if an individual operated a business as a sole proprietorship. So everything is really flexible at that level. A sole proprietor is not required to pay tax at the corporate level. On the other hand, a multi-member LLC may choose to be treated as a partnership, may actually choose to be taxed and treated as a partnership. In either case, any profits are taxed to the shareholders and not the entity itself. So this is kind of cool. So when you have an LLC, you basically, even when you file, you still need to file taxes though. When you have a corporation, a C corporation, you have to file Form 1120. When you have an S corporation, you have to file Form 1120S. And when you have an LLC, you need to file Form 1065. And Form 1065 is an informational return. In other words, you don't pay taxes at the company level. You're just informing the IRS of what's really happening. Let's now talk about cost. So really, when we talk about LLC versus Inc., what is the cost here? I want to say here that in general, based on our research, it costs way more to incorporate than it does to form an LLC. And it costs way more to actually maintain a corporation than it does to maintain an LLC. Okay? And the thing here is that the cost actually depends on the state in which the business is going to operate, and the number of states also the business wants to operate, like outside of its home state. Because what will happen here is that you might need to actually form a foreign corporation. Let's say you are in New York, right? So you're registered as a New York corporation, or let's say as a Delaware corporation, as it is actually the habit of multiple people right now. And you really want to operate in New York. You want to do business in New York. So in New York, you need to actually file to become a foreign corporation in New York. It's the same thing for LLC. You need to file to become a foreign LLC if you're not actually incorporated in the state. So when it comes to taxes, or when it comes to cost, so we're speaking about LLC versus Inc. Determining which entity type best suits your business specific needs is never a simple process. It's actually normally best to consult with a tax expert, financial advisor, or attorney, tax attorney, of course, or let's just say, if you seek to start a new business, whether you decide to incorporate your new business or form an LLC, an attorney is equipped to assist you with preparing and filing the required legal documents in your state to get you up and running. And it's all about actually complying. And keep in mind, when we talk about LLC versus Inc., you have all 50 states have different requirements when it comes to abiding by the rule. This is why you want to actually entrust part of the service to a third party, so they can actually help you out in terms of deciding whether you should go with an LLC or a corporation. Thank you so much for your attention. I really appreciate it. In today's conversation, I just spoke to you about LLC versus Inc. And I gave you the overview. And I also gave you a few items to think about before you make a decision. For instance, the structure and ownership features of the companies, the startup process, corporations and LLCs, things they have to really abide by, the annual filing and similar obligations, and so on and so forth. Also, tax time and the cost. Thank you so much. God bless you. I'll see you next time. Until then, remember, stay marvelous.